Let's also focus on Trent. This one is buzzing because Goldman Sachs is positive actually, but interestingly, this one is down about 1.5% in trade. Mahima joins in with more details. Mahima, what are you picking up?
So basically, Goldman Sachs has maintained a buy with a target price of 8120 on Trent, and they met Neeraj Basu, the CFO of the company, and the key takeaways include that faster than expected store sales ramp up and healthy cannibalization of two main reasons for moderation of like-for-like growth. In terms of they expect the strategy to of the healthy cannibalization to eventually lead to higher wallet share, and main reason for like moderation was not competition, is what the Trend management has said. They're also saying that impact of store portfolio optimization agenda is likely to be lower in FY26. In terms of the strong retail area addition over the last year to aid sales growth going forward. Sustainable margins of the business could be higher once the higher store expansion phase is behind. Good initial experience with the lab-grown diamond category launch is something that the management has indicated.
Avinash, Trent is something which has mixed opinion on the street. It had given a very good rally, but actually fallen down. A lot of investors were also curious to know whether that was the right time to enter or not. And 8,000 as a target price around that level seems to be very interesting. What are your thoughts?
No, I think my sense is that Trent is a very matured retail player, and I think the introduction of Zudio has given them a very strong mass appeal. However, competition is hotting up, and I think this segment will see a lot of competition from new players, especially players like Reliance who have teamed up with Shein. So that definitely is going to create a lot of excitement in this segment, but at the same time, margins in this segment will be under pressure. Now, coming to the opportunity for retail over the next couple of years, I would believe that consumption is a theme which is going to be very strong. We would see some benefits coming in, from the budget, taxation benefits, plus rate cuts have been announced. So I think somewhere from the quarter one of FY26 onwards, we could see a little kind of bouncing back of consumption coming back in specifically the retail segment. Trent has always focused on quality, innovation, and I think despite the fact that the stock has corrected, I would say that somebody wants to build a portfolio. Even the current levels today, where the stock is currently down by about 2%, it could be a good opportunity to start a small nibbling in this counter, provided you have at least 12 to 15 months a time frame. Because it's very difficult to give you a target price as to whether it would go to 7,000 or 8,000. But yes, I think in terms of their positioning and in terms of their retail reach, I think the Tatas have done a very good job. Most importantly, it's a trusted brand and now has actually started offering value for money products. Of course, the entry into the lab-grown diamond segment is another big opportunity. And if they click it properly, that could be another growth engine for the company. So I think, one should take a longer term call here. In the short term, it's very difficult to visualize how the stock will correct or how the stock will be volatile, because numbers actually for the third quarter were below market expectations.